Now, let's talk about auditing the payroll cycle through a service organization because normally, if you want to audit inventory, well, the company's holding their inventory. Or if you want to audit the revenue cycle, guess what? The company also deals with their own revenue. But if you're trying to audit the payroll cycle, which is just as important as any of these other cycles, you're trying to do that for the company. And guess what? They outsource to ADP. That throws a little bit of a wrench in the machine. So we're trying to think about how are we going to audit ADP? Are we going to audit ADP? We'll talk about that all throughout here. Now, the auditor would begin by obtaining an understanding of the payroll cycle. First off, what functions are performed by the client, what functions are performed by ADP. And I'm just going to say ADP. I know we're talking about a third-party service organization. It could be any of them, but I'm just going to say ADP. Also, it rolls off the tongue a little bit easier too. So we want to understand the cycle, who's in charge of what, the client's internal control over payroll. Makes sense. He or she would also request a general description of the service organization's payroll processing system, including info about the organization's computer systems, personnel, and procedures. So yeah, we want to get as familiar as we can. Now, obviously, in the real world, this is pretty streamlined. Many companies get audited, and many companies that are getting audited use ADP. So ADP's got a pretty standard, streamlined process of getting these auditors the information they need. Then the auditor would review the service organization's contracts with the clients to ensure that the client has a sufficient understanding of the services provided, the controls that are in place, and the fees that are charged. Because if ADP is, let's just say they're kind of screwing them over, that's something we want to assess as well. The auditor would also review the client's internal control over payroll, including its policies and procedures for authorizing payroll transactions and recording payroll data. Now, additionally, the auditor would test the service organization's processes by examining the accuracy of the payroll data. If we're recalculating the data and we see that ADP is doing it wrong, that's a great accounting auditing procedure. The completeness of the payroll reports and the completeness of the payroll journal entries. For example, you may have ADP deal with the direct deposit and the majority of what happens, but then you may have your own payroll employees deal with the journal entries. He or she would also review the payroll tax filings and payments to ensure that these have been filed and timely and they are accurate. Lastly, here, the auditor would report any deficiencies in the client's internal control over payroll or in the service organization's processing system to the client. Now, a lot of times, ADP is a public company. ADP has an audit as well. And the auditor, if you're auditing Microsoft and Microsoft uses ADP, you would incorporate ADP's financial statements into the audit of Microsoft because ADP performs a significant function of Microsoft, which is paying their employees. Now, if any of you work for Microsoft and they don't use ADP, sorry, I don't really know who Microsoft uses. That is my example for the day. Talking about segregation of duties and internal controls for payroll, well, just generally speaking, when it comes to payroll, if ADP is in charge of it, that's pretty much the end of segregation of duties. But like I said, there is a lot still within the payroll function you need to consider. Now, how would you test segregation of duties as an auditor? You would verify that payroll activities are properly segregated among different individuals. If we're thinking old-fashioned, who hands out the paychecks? Well, in this case, they're distributed by ADP. So you make sure that's different than the person who records the entries, records the bookkeeping. You would examine the payroll authorization process, who authorized it. Now, this ties in with human resources as well, making sure that someone who gets hired is real because, like I said, a common scheme, and I don't know how common it is, but commonly spoken about on the exam is someone will create a fake employee and then, oh, they should get paid. Oh, okay, let me collect their paycheck for them because they don't exist. So that would be something for sure. We want to review payroll reconciliations. That's pretty just like we'd review the cash rec or the debt reconciliation for those accounts. We would assess the accuracy and the completeness of payroll data, ensure that any payroll related adjustments are properly approved because adjustments, well, if I try to make an adjustment and say, oh, I actually should have gotten an extra $2,000, but that doesn't get approved and I didn't actually deserve an extra $2,000, that's a problem. Lastly, confirming that payroll related data is properly safeguarded. Yep, very sensitive data. I've worked on a lot of client files in my day, and one of the files that always has to be password protected is payroll data because it's very sensitive, right? What people are getting paid is very sensitive for many reasons, not to go into that, but let's continue on. Now, here are examples of properly designed internal controls for the payroll cycle. First off, we have the accounting department wires transfers of funds to the payroll bank account. In this case, the accounting department never has access to the actual funds, so they just facilitate the transfer, but they never have the ability to get those funds. The payroll department, which is record keeping, prepares checks, and the CFO signs the payroll checks. They have custody of those checks, and presumably an authorization function. It's kind of a dual purpose there. The payroll department, well, they have custody of the checks and they have the authorization to give those checks to individuals, but they never have custody of actual money there. The payroll department prepares checks using a signature plate. The treasurer, which is a custody function, supervises the process before payroll checks are distributed, separating the ability to hire personnel, which is authorization, and distribute payroll checks, which is custody. If these functions were not separate, the individual in charge of these activities could possibly create fake employees and collect the paychecks themselves. That's not good. Don't get any funny ideas, you. Now, to prevent payment being made for work not performed, the company should require that employees need their direct supervisors to approve their time cards. Think about it. You work for an accounting firm. Your manager looks over those individuals above you look over your timesheet. By saying timesheet, a lot of you are getting riled up. Yeah, I mean, I feel the same way. Working in public accounting with timesheets is not fun. But yeah, I mean, that's the process. You have to have it looked over to make sure you're actually doing your work. As the direct supervisor is the individual witnessing the actual work being performed, so they would know if you're doing it and they can sign off on that. Lastly, here, the personnel department sends notices of employee hiring and termination to the payroll department so that payroll knows those who should begin receiving paychecks and those who should not receive checks anymore. Now, there's going to be a process overall that if someone's hired or fired, a notice should be sent to every department related. IT, making sure they don't have access to their email, thinking about internal controls, IT-related controls, but also specifically for payroll cycle, making sure that it's communicated effectively, timely, and properly, so no one's getting paid they shouldn't be, or they are getting paid when they should be. Here are some general audit testing, some general items that you would do when you're auditing payroll. You're going to use analytical procedures to compare payroll costs with entity standards or budgets. If we have two manufacturing companies and one manufacturing company, which is not your audit client, you're just looking at them, they have 10 employees and they have an average salaries and wage expense of $20,000 per employee, or whatever that might be. Maybe it's $20,000 or $200,000 as a whole, whatever. And let's just say this is the industry standard also. So this is the overall industry standard: is companies that have 10 employees usually pay them about $20,000. In this case, in your client, they've got 10 employees, but it looks like they're paying them 15. That might be something to look into. Recalculating payroll accruals, making sure that the payroll system is functioning properly. Because payroll, when we talk about, it's kind of like interest payable and interest expense. Payroll, it gets accrued. You get paid every 2 weeks. It gets accrued and then paid down. Whereas interest expense goes up and up and up and up because it's a period of time that you're reflecting on. Whereas accruals, balance sheet, it goes up and up. And then once it's paid down, it goes to zero because there's no more accrued payroll. It's paid out. Segregation of duties, more so internal controls here. Let's talk about this. The payroll clerk is going to distribute signed payroll checks. Undistributed checks are then returned to the payroll department. This is an issue as unclaimed payroll checks should be returned to an independent third party, such as a payroll service provider, for follow-up. So if we think about how it works, ADP, if a check is not claimed, ADP is in possession, and obviously they would reconcile that. They would figure out what happened. Returning checks, which is custody of the checks, to the payroll department, which is record keeping, is an example of inadequate segregation of duties, as the payroll employees can now cash these unclaimed checks and sign payroll checks for themselves. Payroll department, if they get these checks back, they can fudge the numbers and cash them and say, oh yeah, these are our checks. They belong in our pockets. Definitely a concern there. This is an improperly designed internal control. Existence for payroll. How do we prove the existence? Well, we could test controls by selecting entries from the payroll register and vouching them to source documents. We're selecting entries from the register, bringing them over to the source documents, making sure that, okay, we find someone who is supposedly being paid, and then look for their actual paycheck. That would be something to look out for. Completeness, what are we going to do here? Well, we can inspect evidence related to pre-numbering of payroll checks. Every document, purchase orders, everything, you should have pre-numbering. So it's document 1, 2, 3, 4, 5, up to $1 million, $1 million, $2 million, $2 million and 500. So you just keep going. That way you avoid duplicates. You don't want duplicates. That is a problem. You don't want someone creating a duplicate check and then cashing that. That's something to watch out for here. And you want to inspect evidence related to that. You want to make sure that everything is properly accounted for. For occurrence, what are we going to do here? Well, we are going to vouch data for a sample of employees in a payroll register to approved clock card data. So we have Just say 10 employees. We sample, the company's got 100 employees. We select 10 of them from the payroll register, which is the listing of those employees and what they're getting paid. We compare that to approve clock card data to provide assurance that employees work the number of hours for which they're paid. We have 10 employees. It says they each work 5 hours. Well, just look at the actual documents, see if that's what happened. Next, you want to observe the segregation of duties concerning personal responsibilities and payroll disbursement in order to ensure that only valid employees receive paychecks, making sure paychecks aren't just being handed out to anyone and everyone. Valuation. How are we going to test valuation, allocation, and accuracy? Well, we're going to verify the preparation of the monthly payroll account bank reconciliation, making sure that we see the money is accrued. We check it against the time cards. We see the money flowing out of the bank account and into the employees' bank accounts. We're not going to actually look into the employees' bank accounts, but it's left there and it goes into their bank accounts. And we are going to recompute payroll deductions, making sure all the numbers tie out. For cutoff, we're going to make sure that we examine time cards before and after year end to make sure we didn't pay someone for next year during this year and vice versa. Presentation and disclosure. Here, you're going to examine checks for proper classification. Here, you want to make sure you don't accidentally record someone's normal salaries and wages as executive compensation. That's something you usually have to break out. If stock options, if we got bonuses, incentive-based bonuses, anything like that, you want to make sure that payroll, when it comes to payroll and what people are getting paid, it is properly classified as the accurate representation of what that stood for. Lastly, here, let's talk about our departments involved in the payroll cycle. We talked about how human resources is pretty important here. They are responsible for tracking employee hours, maintaining records of wages, salaries, and benefits, as well as ensuring that they have a record of who actually works for the company and who should be getting paid. Accounting department, always the ever important accounting department. They're going to calculate and process payroll, preparing payroll reports, and reconciling payroll accounts. The tax department, they're going to file taxes. We got a lot of taxes when it comes to hiring someone. Yeah, hiring someone is pretty expensive and very costly because you need to withhold money and then pay it to the IRS and pay extra taxes on those employees. For the finance department, you're responsible for managing the company's budget, ensuring that payroll expenses are paid on time, and ensuring that all payroll-related information is properly recorded. For the legal department, responsible for ensuring that the company is in compliance with all laws and regulations. And lastly, IT. Let's just say they deal with their IT things. That's just going to be, they do. We're not going to get into that. Awesome, and we are on to our next cycle. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.